Hello everyone. If you are someone who's looking to get started in with real estate investing in today's market, wow, well you are very few of them who are like us who's getting started in today's market. I'm not gonna lie, it is not easy. It is a bloodbath out there when it comes to cash flow numbers, just because of how high the interest rate is. House prices have came down, but still the mortgage payments are more or less same as you would pay for a high price house just because of the interest rate, and it will keep on going up for a foreseeable future at least until next year, like as far as I can see how things are gonna be. But as I say, when the going gets tough gets going. So this is a really important time for someone if you are looking to get invested and a serious investor into the properties, kind of properties you can invest right now. So there are properties out there right now which won't go cash flow in a traditional way, but if you are someone who's a creative person who is willing to take that extra step in today's market to make things work, then you can make those properties cash flow as well. So first, a few things we're going to go over is what sort of properties you should look for in today's market to get that cash flow in there, and on top of that, what are the changes, the small changes or small addition that you can make in the existing properties to make them cash flow or go get over the hump today's market. So these are the strategies that you should use for next year and a half until things go back to normal. Hopefully they do go back to normal soon, but in any case, if you use these formulas, stick to the basics, make sure your fundamentals are strong in the properties. When you're finding out, you will be cash flow positive regardless of the market you are in. Think about it. If you are cash flow positive and successful investor in today's market, when things turn around, you will be running around with like ahead of everyone else. So that's the beauty of this market. That's how I look at the things as well. Being a real estate investor and a realtor myself, hey, like how can I be successful in today's market? And if I can do that in today's market, I can't even imagine what I'm going to do in when things go back to normal, and they will go back to normal. That's a cycle. It's going to keep going up and up. And then more important part is now we know how to deal with when things are bad, and then when the next time it'll happen, which it will happen hopefully in 10 years, 15 years, whatever time, we will be much more ready and we can use this kind of market to our advantage. So first of all, we're going to talk about what sort of properties you want to get into in today's market. So one thing is, in this market, depending on what sort of mortgage, so I'm going to talk about the range starting from 350 to 400 and then above that. So first of all, look for the properties which are duplex. If not duplex, legal duplex, maybe the property which has a basement with a separate unit. Basement can have a bedroom made, or if it's just like a studio style, that would work as well. And then upstairs should have a minimum 3 bedroom, and if there is a room to make another one 4, that's great as well, but minimum 4. It's going to be 3+1 or 3+ something in basement. Basement has to be furnished. Do not buy a property with unfurnished basement, and if there's a separate entrance, even better. Try to look for those properties that are out there in this market right now. They are sitting on market for a while. It's not easy to sell those properties in today's market, so you can use those things to your advantage, because I know I was there when the market was good. These kind of properties doesn't come often. So but again, so now they are there. So especially, so I'm going to talk about 3 markets. The market that I usually operate in, which is Kitchener, Waterloo, Cambridge, and then London, and then we're going to talk about the Windsor. So the first one is, so in London, if you want to get a legal duplex, mostly around 650 to 700, you should be able to get something. I'm talking about duplex. When I say duplex, I mean 3 units in there and then 1 or 2 unit in the basement, or it could be depending on how the floors are separated, but a legal duplex. So that's a range for duplex. So this kind of duplex, yeah, if you get this duplex, and make sure you get it within the range, do not overpay for that property just because it's a duplex, otherwise you won't be able to cash flow. Run simple math. So I use websites like Bigger Pockets. They have a mortgage calculator or a cash flow calculator, that's what they call it. Use that number and then go through the property number. It gives you some beautiful graphs, how you're going to be, what sort of numbers you're looking at. And rent prices are high, but at the same time, just because your mortgage payments are so high, it's very hard to be cash flow positive. So you want to make sure, if you are renting out something, you want to find the tenants who will be paying all the utilities. As a landlord in today's market, you cannot afford to pay any utilities out of your pocket. So make sure when you screen those tenants, you gotta be clear with them and be upfront with them. There's nothing hiding about it. Just tell them, like, hey, like, this is my situation. I can't afford to do this in today's market. Hopefully when things go back, you can take off some of that cost from their hand and take it into your account once your number looks good on your end. But in today's market, you just gotta give it to them. Can't afford to do it yourself. If your number works, yeah, of course you can do it. But if you are buying a property right now, the chances are you can't afford to do it. So that's a duplex. So 3+ something in the basement, that's a strategy for it, with a separate entrance. That's a must in there. And then range in Kitchener, Waterloo, that's, I said, 650 to 700. In Kitchener and London, you can go another 100k less, and if you go further to the Windsor, another 100k less for those kind of properties. Those properties are there in the market. You just have to look for them. You're not going to find them easily, so make sure you keep an eye on it and have someone help you out if you can. If you can find yourself, great, do it by all means. So, and then the second part is, if you are someone who can afford to do a little bit more, so go into triplex, fourplex. That's the segment which is very attractive. That's a segment that I am personally invested in right now. That's what I'm asking my clients to look after as well. So properties like triplex, legal triplex, fourplex, fiveplex. In Kitchener, Cambridge, I'll talk about these properties because I just checked a few of them just last week, bringing in an offer on one of them for my clients in few days. So it's a triplex, legal triplex. The range is around 850 to 950. That's a range for the triplex we are looking in Kitchener-Waterloo area. These are nicely built triplex, 2 to 3 bedroom each unit. So you can imagine the kind of rent, and they have vacant possession. That's a must. Yeah, that's something that I want to talk about. So when you look for these properties, make sure you gotta have a vacant possession. I know it's not easy to find, but properties are there. The reason being, just because if you have tenants who've been there for more than 2 years, likelihood of their rent being competitive is very low. They're going to be probably paying less than $1,000 for 2 unit on an average, or even if it's a 3 unit, it's going to be somewhere close to 1,000 unit. That's what the rent were a few years back. But if you have tenants those, then there's no way the numbers are not going to work. So you probably have to give a pass on those properties, just because it's just not going to work out. The math is not going to work. Again, is it easy to find these kind of properties? No, but if it had been easy, everyone would do it. That's why being a real estate investor, being a savvy real estate investor, you want to be up and front about it, and you want to figure out a way and find these properties. These are there. I'm seeing everywhere. I can give you a list of properties which are vacant possession, 3 triplex, 4plex in every city like you could ask me for. So yeah, and then the good part was you have enough time to do your due diligence about these properties. Make sure you have all the conditions in your offers, go through them, do your numbers right. It will help you, definitely help you in the mortgage, especially as long as you're staying within the 4plex or less. You only have to put 20% down, but obviously you have to get qualified for the mortgage. But being having 3 extra unit with the income potential, bank will definitely look at you favorably in terms of giving you the mortgage. So that's the story about up to 4plex. That's the strategy you want to use. Like, one is if you're using a single family duplex, make sure it's a basement duplex. A basement apartment is there, even if it's like a legal basement. But at least if you're buying just a single family house, which could be at 500 or somewhere between 500 to 600 range, you want to make sure the basement there is, it's the ratio has to be 3 plus something in the basement. So that's the only way you're going to be for single family. Then if you're going for duplex, triplex, quadplex, go for those property, but make sure you get the properties which can have a vacant possession. That's a must in today's market. Otherwise there's no way you can be cash flow positive. And then once you get the vacant possession as well, now if you go by the long-term tenanting, there are good chances you again go back into the circle. With few more interest rate hikes coming in the future, you'll again run into a problem of being not being cash flow positive. So how do you avoid those situations? So make sure you can go with the traditional. I know everyone loves to have a family in their house, and that's what I would prefer as well if things would have been. But however, in today's market, if you go for long-term tenants, you're not going to be competitive in terms of your cash flow. So you're going to be a little creative, have to let your guard down, and have to go for short-term renting, be it Airbnb. Some cities, depending on the location, Airbnb is a very feasible option. So try that out. Do not go buy any expensive furniture. Make sure you check it out online. What are the things you can do for Airbnb? Keep it low profile and try to generate some positive cash flow through that Airbnb. That's one of them, but that's something not everyone can afford to do. Something that everyone can afford to do is like you rent the properties per room basis. So depending on which cities you are in, average room rent, if you just Kijiji or go on Facebook Marketplace, you'll find it's pretty competitive. Depending on Kitchener-Waterloo, you're looking at 800 up to 900 certain areas in the city, depending on how close it is from university or college. That's the way to go. That's the only way you're going to be cash flow positive in today's market. You want to have those short-term tenants, be it student, working professional. They stay there with 8 months or a year up to after that the semester is done. Students are most probably they're going to leave the place. Then you have to find the tenants again. But at the same time, now you're covered for 9 months. That's what you got to look at. And after 9 months, when the rent price is probably going to keep going up, so then you can find a new tenant with even a better rental rate. So this way you'll never run into issue of having a low cash flow on your properties. So yeah, it's could be a short-term strategy, but this is a strategy for this market. This is a strategy ideal for this market. So make sure you stick to your guns. Do not let your guard down on, hey, I'm gonna play safe, I'm just gonna find a nice family, which is great. You can find those, but you're just not gonna be cash flow positive. Your property won't be cash flow property in today's market, especially the ones that you are looking for. So again, up to 4plex, this is the strategy you can use. First one is find the properties which has these added value, the basement apartments, and then find a triplex. I gave you the range already. Up to $1 million you can get properties triplex, or even 4plex. If you go a little above $1 million, 1.1, you can get 4plex easily. Anywhere in London, Kitchener, Waterloo and Windsor, it's even cheaper. So that's the kind of properties you want to look at. And then when it comes to renting, make sure you find the tenants which are there for the short-term basis, be it student rental, or you can go working professional, but you have to go rent by room. You can't rent the entire house. It's just not going to work out. And make sure you have those that utilities has to be taken care by the tenants. Landlord in today's market, you just can't afford. As an investor, you can't afford to do it. Like, if property numbers allows you, by all means do it. But if you go very detailed in your numbers, pretty sure numbers are not going to make sense for you to do it this way. So again, yeah, that's my today's tips for that. But if you are looking for more information, please send me a message on Instagram or LinkedIn or anywhere on the YouTube itself as well. Tell me what your thoughts on it, and if you want me to make any more videos about something specific topic, please shoot out that that as well. I would love to bring more and more content about it, and yeah, just stay tuned for more videos.